What kind of people don't derive as much value from owning a house?
Those that are going to move quickly or have low marginal tax rates, it won't likely make sense to buy a home from a cost perspective, but there's other kind of intangible benefits. Perhaps you just want to own a home, there's great school districts, or it's a means to accumulate wealth. I think it's definitely true, the research has shown that people are better off on average if you were to rent and invest the difference. The problem though is most people don't invest the difference. And so the home can be a means to accumulate wealth, but isn't the best means if you're kind of truly rational, kind of invest the money instead.
And you said that a home was kind of a mix of a stock and a bond. But not really, right? Because the home has a lot of what we call idiosyncratic risk.
That's right.
So how do you deal with that?
Well, so that's the unique part, because people think about, they look at national housing indexes. The Case-Shiller has a bunch of these, and the problem is that unlike a portfolio where you buy thousands of stocks, you only own one home, right? And so the risk of an individual home is more than double the risk of the national index. And so the problem becomes, well, if you happen to own a home in San Diego or in San Francisco, or even New York, you earned a relatively high rate of return historically. If you owned a home in Cleveland or Detroit or Phoenix over the last 10 years, you probably have a negative return over time. And so the problem really is the risk there for each individual house.
And so how does that affect planning?
So it makes it very difficult, because certain assets like Social Security, relatively straightforward. So Social Security is a bond-like asset. The more of it that I have, the more aggressive I can be in my portfolio. But a home, it's very personalized. One thing people don't realize about homes is that for a lot of younger investors, it's the riskiest asset on their balance sheet. Again, if we go back to this example that homes are 60% stock-like. Well, if you buy a home with 20% down, right, the effective risk of that home in your portfolio is about a 3 times leveraged stock market index, right? And so for most people, a home is a very volatile asset. I think that when thinking about, well, how does it affect my portfolio? If you own your home, you have still a somewhat risky asset, but for younger homeowners, you need to definitely have a larger cash cushion to kind of buffer the possible loss in equity value.